Hello dear traders, I'm Maria Startup and this is the review of crypto analytics from fx.co. It's the 24th of January today, Tuesday, and now at today's review. Japan calls for joint efforts to regulate the sphere of cryptocurrencies and what can be the impact. Meanwhile, Ether and Bitcoin keep making bullish breakouts of resistance zones, and whether we should still expect the predicted local correction. Okay, let's start. We will start as usual with news and the article by Jakub Novak. The news from Japan this time, where Japan is urging global regulators to approach cryptocurrencies with the same rigor as banks. And this appeal comes in the wake of the collapse of FTX, Digital Asset Exchange. And the Deputy Director General of the Financial Services Agency Strategy and Management Bureau of Japan said that cryptocurrency has become so enormous and you must use the same procedures as you do for the market of traditional financial instruments. However, several experts have consistently stated that the current laws and rules used to regulate financial institutions do not apply to the market for digital currencies, including cryptocurrencies. It can further injure the market and its participants. He claims that the Japanese regulatory agency has started urging its peers in the US, Europe, and other nations to regulate cryptocurrency exchanges similarly to how banks and brokerage firms are regulated. However, it's important to note that many of them are already attempting to do this, which merely causes stress on the Bitcoin market and forces its participants to find fresh security flaws and ways to avoid regulation. It should be said that there's a lot to be done in this field so far, and probably it will be, but it will take some time. And here in this article, we'll take some information about Ethereum first, and then we will get to Bitcoin. So let's have a look at the chart, what Jakub says. The breakdown of the nearest resistance at 1693 is what Ether buyers are concentrating on. This is going to be sufficient to establish a foothold at the current level, current highs, and keep bullish trend going. The balance will be returned to Ether upon consolidation above this point, with the possibility to increase to maximum of 1758, where a second target will be 1819. However, if the pressure on the instrument resumes and the 1600 support collapses, the 1504 level will come into play. If it succeeds, the trading instrument will rise to a minimum of 1410, and it will be extremely difficult for owners to trade below 1320. Okay, let's have a look at the chart. So today, 24th of January, and Ethereum opened today at 1625, and now it is trading at 1634. So far it's above the support area. However, it's quite far from the nearest resistance at 1693. It's somewhere in the middle. So we will keep watching. And now let's get to a Bitcoin and another article by Artem Petrenko. So the price, as we remember, spent the weekend in consolidation near 23,000 level, and Bitcoin is systematically making bullish breakouts of difficult resistance zone, leaving the bearish sentiment in the market. Sentiment experts believe that the cryptocurrency's current upward movement was made possible by a successful period of redistribution of Bitcoin coins. And analysts also report that a large group of addresses with balances of 1,000 to 10,000 Bitcoin played a significant role in the rally. It's important to note that the current trading activity, which remains in the region of $25 billion per day, is still not enough. According to the latest statistics, about 75% of all existing Bitcoin remain stored on cold wallets. This reduces Bitcoin's bullish potential, but at the same time points to the cryptocurrency's fundamental value, as more than 14 million Bitcoins are safe and cannot affect the market. A key signal for the upcoming rally, Tom says, will be Grayscale's performance. Given the recent FTX-related events and still high volatility in the crypto market, whales prefer to acquire Bitcoin through instruments in familiar instruments, stocks. Given these facts, we can conclude that the closer the market is to the next bullish rally, the greater the growth of Grayscale shares we will see. It also should be noted that the current price movement of Bitcoin is fully consistent with similar situation in 2012 and 16. As of yesterday, the cryptocurrency fully follows the route from the local bottom to the gradual formation of a new value record. As for S&P 500 index, it ended the trading week on a high note, as it has formed a bullish engulfing pattern and may continue its upward movement this week. The correlation between S&P and Bitcoin remains, but lately we have seen the crypto asset exhibit more independent behavior. Given this, we can assume that the relationship between them may decline soon. As for the technical picture of Bitcoin, let's have a look at the chart. It made an unsuccessful retest of 23,000.4 level of the weekend. At the same time, the asset has finally completed the formation of the cup and handle pattern, which indicates the continuation of the upward movement. The ultimate potential for a cup and handle pattern is 28,000. However, next days will show how much market sentiment will change, and if euphoria occurs, the pattern may go through local price drops. So as a result, Tom says that Bitcoin is still heavily overbought, but this does not affect the bullish potential. At the same time, the asset will most likely continue to grow by the end of the current week due to the celebration of Chinese New Year, and therefore local euphoria will reign in Asian markets. Given this, we'll have time to test the 23,000.5 level and may move further towards 24,000. However, the reporting period will start next week, and including the Fed meeting. By that time, market sentiment will finally get bogged down in greed, and we should expect a local correction to the levels of 20,000 to 21,000. Okay, let's have a look at the chart of Bitcoin for the moment. And today is 24th of January, and Bitcoin opened today at 22,948, and now it is trading at 23,000. 57. So the situation hasn't dramatically changed since yesterday. It's still around this very 23,000 mark. However, as Artem predicted, it can possibly go to 23,000.5 and even 24,000 before the end of the week. So, as usual, we will keep watching. Okay, and this is all for today. We will see each other in our next review tomorrow. I wish you, as usual, profitable trading and a very good day. And we'll be glad to see your comments and questions down below. See you soon. Bye-bye.